Welcome back, traders, to another exciting live stream. I'm so sorry for being away for a very long time. So sorry for being away for a very long time. So sorry about that. I've been going through a lot lately, but thank God I'm over it, and I'll keep delivering you guys good signals and educational content. So I'm so sorry about that once again. So let's start with the gold. We are currently on the gold charts and US oil. We're on the 4-hour time frame. So this was the level that was broken by this 4-hour candle here. So price pulled back to the level. So all we are waiting for right now is for price to pull back to the area again to create what we identify as a double top pattern. So if you are currently not in the buy already, avoid taking any buys. Wait for price to get back down to this level which is 27 27.38. Wait for price to get back to 27.38 for you to take a sell. And remember, once price get to the level, let's scale down to the 1-hour time frame. So once price get to the level, we are not going to be taking sells immediately. We are going to wait for signs. Once price gets to this level, we'll scale down to the 15 minutes or 5 minutes to get early signs of weak rejection. We want to see price rejecting that area before we can sell the market. So weak rejections like this, because most of you guys ask me when to sell the market, when to enter. So this weak rejection we want to be seen once price get back to this level. Remember, we are not only looking for only one confluence or one weak rejection. We want to see multiple weak rejections when price gets to the level. Let's say the minimum of two weak rejection. That's when you scale down to the 15 minutes time frame. But for now, we are still waiting for price to pull back to this key level. Unless price pull back to the area, we are not selling the market. So keep that in mind. That's all we are waiting for right now. Okay, welcome back traders. As I said, all we are waiting for is for price to get back down to this level, and price is currently at the level right now. So we are going to use a scaling down technique. We are going to scale down to the 15 minutes time frame. Okay, let's use the 5 minutes so that we can get early signs of failing to break above the level through multiple week rejection. Remember, we are not selling the market immediately. Keep that in mind. We are not selling the market immediately. We want to get at least two multiple week rejections. And if you must sell the market right now, use the sell stop order. The reason for that, so that you can enter the market when price start pushing down. You don't want to take an instant sell and the market continue up and stop you out, or the market creates a long week rejection and stop you out before finally pushing down. So that's the beauty of using a sell stop order in this case. But we are not in a rush. I'm going to be patient to see what happens when price gets to the level. But it's up to you. I don't know the entry technique you use. If you still want to take an instant sell, that's up to you. But personally, I'm going to be waiting for price to reject that area first. So that's all I'm waiting for. Remember, this is a strong bullish candle. It's a strong momentum in the market, bullish momentum. So all I'm waiting for is to see the depletion of this bullish candle once price gets to this level for me to take a sell. But I'm not selling the market just yet. And yeah, I'm just waiting. I'm not taking the sell right now. And remember, any sell you take, your stop loss must be above the key level. This is where your safest stop loss is going to be, above the level. So if you take a sell, make sure your stop loss is above this level, at least a 3 or 4 pips stop loss. And that's the beauty of taking your trade at key level. You have a more safer and smaller stop loss with a big reward. So that's how I approach that. So on the 15 minutes time frame, price is turning bearish. So if you are currently on the live stream, it takes you a second. Give us a thumbs up, subscribe if you are a new viewer, so that you get notified whenever we're having these streams. It takes you a second, but it does a lot more for the channel growth. Give us a thumbs up, give us a like. It takes you a second. So as I said, all we are waiting for is to get weak rejection, for price to reject this area. And another tip I want to share with you guys is, whenever price is pulling back to a key area like this, it doesn't leave the area so aggressively that you miss an entry. Most of the time, price consolidate for a while around that area. If you scale down to your 5 minutes or 15 minutes, price hover around that area for some time before finally pushing down. Unless the market is very volatile, that once price get to the level, it just reject the area strongly and continue down. But it's very rare unless there's a high volatility in the market. But most of the time, price at least give up multiple week rejection before leaving the area. I'll show you. As you can see on the 30 minutes, once price comes for the retest, you can see price didn't just leave that area immediately. Price rally around that area for some time before finally leaving that area. I'm not saying that this is what price does all the time, but as I said, unless there's high volatility in the market, price don't usually just leave an area so aggressively that you miss an entry. It mostly consolidates for a while, giving you the opportunity to see multiple week rejections before deciding to take a trade. So in this case, I will be using the 5 minutes to get my early signs of price failing to break above through multiple week rejection. Currently, I have only 1 week, but I still need more week rejection to be able to validate that this is a strong area and I can sell the market back down. but I'm not faced by this move, this this bearish move on the 5-minute candle. I still want more information, more confluence to take the trade. So as I said, if you're on the stream, like the stream, give us a thumbs up. It takes you a second to do that, but it does a lot more for the channel. And we also offer daily signal on gold, but that's a paid membership. If you want to be part of that, check out the video description, chat me up, and I will add you to the group, VIP group membership. It's a paid membership. We also have a free Telegram group where we drop educational content. And so as I was saying, if you want to be part of the community or want to get daily signal, check out the video description, chat me up, and I will add you to the VIP membership group. So for now, we are still waiting for price to and you can see price is trying to break that level. If you see the 15 minutes time frame, price retrace its move and leave a weak rejection. So still want to see price failing to break this level. If this level holds, I'm going to sell the market, but for now I'm still waiting for more confluence to be able to do that. Quiet. So we have 3-week rejection. So I think this is a good sign to sell the market. So I'm going to be selling the market right now. I'm taking an instant execution. So I'm calling in the trade. So I'm going to place my stop loss above the key level. Around, let me see. I'm going to place my stop loss around 27.43. Because if price is really going to continue down, then there's no reason to break that level. 27. I think I'll be having a trade. Let's see. I'm having a 3 pip stop loss on that trade. Nope. Let me have a 4 pip stop loss on the trade. So I'm currently having a 4 pip stop loss on this trade. And we took the trade because we had 3 multiple week rejection around the area, and that was the confluence we were looking for price to give us 3-week rejection, a minimum of 2-week rejection. So that's what we went for. So we expect price to retest that area and continue down, and our stop loss is safely above the level. And if price is really going to respect this level, I don't think there's price is going to break down this level above. If price start breaking the level and close strongly above, then automatically the trend will be changing from being bullish, from being bearish, because the overall trend is bearish. This was a strong break. We have a pullback or the retest of the level that was broken, which is this level we have marked, and price is coming back to create what we identify as a double top pattern. So the trend is down unless if this level is broken and price close strongly above. That's the only time we'll be changing our bias from being bearish to bullish. But right now the trend is still down. As long as this level is being respected, the trend is down. So I'm holding this trade, and once I can get a 1-to-1 risk to reward, I'm going to trail my stop loss into break even and let the trade run. So I don't know the management technique you use, but once price start pushing in my direction, I will adjust my stop loss into half a position. Right now I'm risking 1% on each trade. Once price start pushing, I will adjust my stop loss into half so that I can only lose half of a percent on this trade. So I'm holding the trade. Price is currently pulling back right now. So I'll hold the trade and see if I can get, if price push strong down, I will trail my stop loss into half. Maybe below this, above this last week that was formed. So that's how I manage my risks. So I'm holding the trade right now. And as I said, if you're on the stream, if you like the script stream, give us a thumbs up. It only takes you a second to do that, but it does a lot more for the channel. And you get notified whenever we're having this stream. If you haven't subscribed, subscribe to the channel. And as I always said, we offer forex course on Zoom. So if you want to be part of that course, you should chat me up and you get more details on that. The Zoom course is a 3 days course. No, it's you have it 3 times a week for 2 months, 3 times a week. So if you want more details on that, for an hour each, 1 hour, 3 times a week, we trade the forex market live. So we answer your question live. You get live feedback on each trade. You take trade live. You answer your questions, and you get more insight and guidance through the Zoom meeting forex course. I also offer forex daily signals. I know I've not been consistent lately. But we are fully back right now. We are fully active. So let's go back to the charts. I'm still holding on gold trade. Let's see what happens. Regardless of the outcome, and this is one of the rule of thumb, if you are always following your trading plan and you're not trading against the trend, you're always trading with the trend and you're not breaking your rules, you are still doing the right thing. Even though you lost your trades, as long as you follow your rules and you were trading with the trend, you still won that day. You're not going to win all of your trades. That's forex for you. But the way you manage your risks is the most important thing. So keep that in mind. So we are playing the waiting game right now. We want to see what happens. So price is currently pushing in our direction. So I'm going to, I still need price to push a little bit down so that I can adjust my stop loss into half of a percent. That's part of my risk management strategy. So let me do that real quickly. I'm going to trail my stop loss into half or somewhere above, slightly above this last week that was formed, which is 27.38. Let me do that real quickly. This is how I approach it. So I'm currently risking half of a percent on this trade. My stop loss is above the last week that was formed. Based on my risk management technique, once price start pushing in my direction, I trail my stop loss into half. So even though price continue up and stop me out, I can only lose half of a percent on this trade. So that's my technique. So I can take 3 or 4 trades and I'll end up losing only a fraction of my account if I lose all those trades, which is quite impossible. So that's the analysis for gold. If you have any question, chat me up or drop it in the comment section. Let me check other pairs for some analysis. Let's check on the US oil and see what's happening there. So for the US oil, let's start from the 4-hour time frame. So as you can see, price was trading, as on the US oil, price was trading below this level, and suddenly we had that break of that level. Price broke above. Now I'm too far away. Let me start from there. Price was holding this level, and we finally had a break below by this 4-hour bearish candle. After the break, what do we see? The next candle is bullish, which is the pullback or the retest of that level. If you scale down to the 1 hour, you see the retest clearly. Let's scale down. So after the break, we had a pullback, which is the retest. So we expect a continuation down. Continuation ended around this area, and price finally broke this level. So if price was holding, this is one of the rule of thumb to keep in mind. If price was holding at an area for a very long time, and we finally had the break of that level, there's a high chance price will continue in that direction up. You can see this more than 10 hours candles just holding this area, and finally we had the break and price continue up. So there's a high possibility prices will come back to this level here, this level we have drawn from the 4-hour time frame. So if you are not currently in the buy, you should avoid taking any buys right now. Wait for price to get back to this level, because this is where your high probability trade to come from, at this level. Or if you must buy the market, then you should wait for a pullback, for price to pull back to this area for a retest. This is where you need to be taking your buys, because any buy you take right now, your safest stop loss must be below the level. So you should wait for price to get back to this retest area, the level it has broken by this 4-hour candle, for price to get here, for you to take a buy so that you can safely place your stop loss below the level. You will have a more smaller and safer stop loss to buy the market back up to some of this level, because remember, the trend was bearish and now the trend is bullish. So let's check on other pairs. Let's check on the pound JPY. And as I said, if you are currently on the live stream, give us a thumbs up. If you are a new viewer, subscribe to the channel so that you get notified whenever we're having these streams. So on pound JPY, price is moving sideways. On the pound JPY, earlier today we identified that price was moving sideways. So we'll mark out our support and our resistance area. The reason we mark out this level is we identify price is holding this level. Price is not breaking below. Whenever price gets to the level, you can see we have 4 or 5 week rejections. The level is rejecting, price is rejecting. Bulls are sitting around this area because they are not allowing price to break below. So this is a strong support area, and that was why we mark out this as our support area. And the resistance area, the same principle applies. We can identify multiple week rejection. The trend was down after making this lower high. After making this, we expected the new lower. After making the lower high, we expect the new lower low to be formed, which didn't. That didn't happen. So the bulls step into the market and stop the market from continuing down. So now we are the ironing, there's no light.
Yeah.
Okay, now just a wash, and you go get that. Let's say 1 or 12 like that.
Today.
Tomorrow, ba.
Tomorrow. I mean, if you just wash am for me now like this, before I come out, if you just come out, collect and just go down.
Okay,
Because
no.
I really need it tomorrow.
No, I go run am now.
Now how much?
300.
Okay, if I just come there, I will just.
But you no go stay long, ba.
Me for there.
Before you come back.
You go come out, me?
No, we dey close before 6.
Before 6, yeah.
Okay, so no wahala. Because based on light no dey, so no.